Hello, everyone, and welcome to another edition of the Smart Investor Podcast, where smart investors get their up to date price analysis and market information. Okay, markets. What has happened since last week? Last week we saw the market, the S&P 500 in particular, gain, and the markets are actually up into the resistance areas. We're going to speak about that, and we're going to analyze the the different markets and the correlations between different markets in terms of what's happening with the U.S. markets and what's happening with the European markets, the Japanese markets, and we're going to take a detailed look at those markets to see what's happening and if we can get any clues as to the overall direction. We're going to also take a look at the breakout in gold. Over the last couple of weeks, I've been seeing an increase in the number of commercials, especially on TV, advertising gold. That they are saying that gold is bottoming out and it's time now to buy gold. And anytime I see the sentiment and advertisements on TV like that, it gets me very nervous, really, in terms of, and it brings into question the validity of this rally that we are currently having. Not to say they are always wrong, but it just gives a point of caution. Put it that way. We're also going to take. I'm going to reveal to you the results of the informal survey I did at the World Money Show that was held March 3rd, 2 weeks ago or so. And speaking with investors, I can just say that the sentiment amongst the investors were, I would say, about 60% were bearish, and about 30% were bullish, and 10% were neutral. But definitely, we had more bearish sentiment than bullish sentiment at the money show in in Orlando. Now, let me just say that this is just an informal survey I did amongst investors that I spoke with. It's nothing scientific. It's just a feeling I was getting from investors. Now, these investors that go to the World Money Show, I would say, are a bit more sophisticated than the average investor, because one of the one of the constant one of the constant values that these folks have is that they pay close attention to the markets generally. While I would say that average investor maybe turns on the financial news every now and then, and they look at their portfolio every now and then. But these are folks at the World Money Show that actually follow the markets quite closely. So I would say they are a bit more sophisticated than the average investor. But as I said, 60% of them were on the bearish side. And I would say most of the presentations that I attended, at least, the presenters were fairly bearish, and they were saying that the markets could, or more than likely, will head to the downside. Again, if you're a bull, and if you are looking for a contrarian viewpoint of the markets, this will be a bit encouraging, because they say that when everyone is on one side, it's probably best to do the opposite of what they are doing. But that's, for what it's worth, those are the results of the informal survey I did at the World Money Show on March 3rd. Okay, so let's take a look at what's happening in the markets. And in front of me, I have a chart of the S&P 500, the futures contract. And for those of you who are listening to the podcast, if you'd like to get the visual presentation and like to look at these charts, you can go to smartinvestorcentral.com and go on the market updates. You'll see the chart. Okay, so we have a daily chart of the S&P 500 in front of me. Now, what this is showing is that we have a market that is very uncertain, and the market is essentially range bound. We have the bottom of the range near the 1800 level, and the top of the range near the 2100, 2150 level. That's top of the range in S&P 500. We're currently trading at roughly 2000. So we're essentially in no man's land. We have had a brief rally off of the bottom uh, since mid-February, and we'll just have to see if the market stays above, can stay above or break resistance in the 2000 level up to the 2500 level. If we break above that, then the market could challenge a high near this 2130, 2140 region. If we do get a decline and we see the market start to decline rapidly back towards the 1800 level, that would be fairly bearish. And what that could do is set us up for a retest of this 1800 level on the S&P 500. So it really depends on what the trading, what will be the trading in the next couple of days. I can say the markets are looking fairly weak because, as I said in previous podcasts, uh, let me just compress the chart. The swing high, the market in August, the rally that occurred between August and November, early December last year, did not take out this high near this 2130 region, and that gives me some cause of concern. That shows that this market, at least now, is initially very weak, and it could not take out that high, and it actually went back down, tested support, and is now rallying back. Now, if we see this rally that started essentially in mid-February falter out in this region and start to head to the downside again, as I said, that would be fairly bearish for the market, and we could retest the 1800 level. If we continue to the upside, we'll see resistance at 2050 and in the 2100 level. Now, taking a look at the Nasdaq has not rallied as much as S&P 500, and if you take a look at the individual stocks in the Nasdaq and the technology sector on a whole, we see that this market, we have some stocks that are down quite significantly off of the highs that were made last year in August of last year or so. So the Nasdaq has not recovered as much as S&P 500 at this point. Now, resistance in the Nasdaq will come in at, or the Nasdaq futures will come in at the 4,550 level, and support in the Nasdaq is roughly at 4,084. Now, taking a look at the Dow Jones Industrial Average, let's look at the actual cash Dow. We see that the market has, similar to the S&P 500, the rally that occurred in between August and November, September, November, did not take out the previous high, which again is cause for concern. The market actually topped out in the 18,000 region, came back down to support, and is mounting a rally. If this rally falters out in this region, we could then retest the 15,500 level, and if that level is broken, I would say that could be the beginning of bear market territory here in the Dow. Now, let's take a look at some of these overseas markets and what has happened. Taking a look at the German DAX, we see a series here of lower highs and lower lows, which is a bit troubling at the moment here. And if you want to take a look at chart, go to smartinvestorcentral.com, that market update. Lower highs and lower lows that we're seeing, and we're coming up on resistance in the 10,000 region in the German DAX. Now, for me to get bullish, we'll have to break this series of lower highs, lower lows. So maybe if we dip back down here and start to see higher highs, higher lows, that would be fairly bullish for the German DAX. Taking a look at the FTSE 100, another chart that has exhibited lower highs and lower lows, as you can see here. Lower highs and lower lows. So this could be the beginning of a bear market in this index. Now this market has come off the high from 7,000 to roughly a low of 5,500. So we have seen a quite a significant pullback in the UK FTSE. Moving further overseas, well, further from where I am, and heading out east in the Nikkei, we see again market making some recovery in the 17,100 level. But again, we are seeing a series of lower highs and lower lows, which is normally characteristic of a downtrend. It closed below the 14,500, and the support points at 14,000 will be quite bearish for this market. Looking at the Shanghai index, we see that the market has not posted much of a recovery, and although the US S&P 500 is up since early February, the Shanghai market is up also, but just barely. The low that was made in January 2770, and the market recovered to a high of 3065. So not much of a rally at this point in time, and this market is actually looking fairly bearish at this point in time. Again, for those of you who are looking at the chart, series lower highs, lower lows, which is characteristic of a downtrend. Okay, so that's what's happening with the equities. We are coming up in summer. We are coming up on resistance in S&P 500, and we're going to take a look how the market reacts to that resistance area. The next market of interest is the US dollar, and we see that the US dollar is in a consolidation pattern. Let me just draw the consolidation line so that you can see. And this is a chart of the US cash index marked this stop between 9,300 and this 101 level on the US dollar index. So we are seeing some sideways action in the currencies at this point in time, and it's my belief that if the market breaks out of this sideways consolidation, either to the upside or to the downside, we could see quite a dramatic move in the dollar. Now, which way it will go at this point in time, I'm just going to be frank with you. It's not exactly clear. But when the market does break, we could see quite a strong move in the value of the US dollar. Taking a look at gold, let's take a look at the cash gold. Yes, this is the cash gold. We have rallied up to the 1280 level, and I was speaking about the commercials that I'm seeing on TV about buying gold. And to me, at this point in time, gold looks a bit extended. We could see a pullback into the 1180 region, 1190 region, and then we'll see if the market is able to hold support at 1190, maybe down to 1150. And if we see the market hold support and start to rally again, maybe that will be a good time to buy gold. But gold, the future of gold now is a bit uncertain. Speaking to folks at the Money Show on the direction of gold, I would say about 80% of them were actually bullish. Maybe that had to do with most of the speakers at the Money Show were very bullish gold. They were saying gold cannot go down anymore, and it's definitely time to buy gold. For those of you who are familiar with Peter Schiff, he is a perma bear, as I call him. Every time I listen to one of his speeches, he's always he's always giving a bearish view of the market. And I've listened to his speeches for the last 2 3 years, and they're always bearish, even though the market has been going up and up and up. And yes, he probably will be right sometime, because the market will turn at some point. But if you're following probably the bearish prognostications over the last 3 years or so, you would more than likely have lost money in in the bearish outlook of the US markets, and also the bullish outlook um, on gold, because we have seen gold fall over the last 5 years. And I believe he has been bullish gold most of the well, at least most of the times I've heard him speak. He has been bullish the gold market. But is this the real turnaround in gold? We'll have to wait and see. We'll have to see how the actual prices bear out at this point in time. And the difference with that, I think, and the real way how I believe to make money in the markets, is follow what the price action is doing. If you have for example, if you have a bullish outlook on the gold market, and you are seeing gold in a series of lower highs, lower lows, what I would do is wait until the market turns around, shows us strength, and then we go in and buy the gold market at that point in time. I would not try to catch a falling knife in these markets, because what can go down now can go down even further in the future. And that's how I believe a lot of investors lose money in the markets, is that they're trying to predict when the market will turn, and the trend lasts longer than they think, and they're out of money. If gold is going to go up, it will be reflected in the prices, and you'll start to see a series of higher highs, higher lows in the market, and that is what is an uptrend. And it is definitely good investing in advice to buy markets that are in an uptrend, as opposed to markets that are in a downtrend. Okay, so those are things we're watching and paying attention, especially this week in the markets. We're at a critical time in the direction of the markets, and as usual, we'll keep you up to date as to our overall outlook on the markets. Thank you very much for listening to the podcast. I do appreciate all your emails that you have sent in about liking the podcast and giving you some clarity. So you can keep them coming. I definitely try to read all of them. Thank you very much for listening, and I hope you have a wonderful investing week.